Welcome to Trading Lounge and the US indices for Friday, October the 1st. Starting with a Russell here. Now, we looked at the same pattern with the S&P 500 yesterday, so I'll just bring that back up. We don't have today's data in this because it's just end of day, but what we noted with this particular pattern here is that we could look at it as an A wave, a B wave, and a C wave here, and then up for one and back for two. I don't have today's bar on it, which will be down lower, but it doesn't count very nicely as a C wave down through to here. So we've got a bit of a problem. This can still just continue sideways here in a bearish manner, and this is the same for this market as well. Even though I've got it as one here and two here and then one here and two here, that's okay, but this 2,200 here is also the 61.8%, so if that becomes the resistance, then we'll need to be looking on the short side. So we'll just quickly have a look at that. We talked about this yesterday as well. So we can count it up here as impulsive, but it can also be counted as corrective as well, because we noted all of that on the NASDAQ and the S&P. So we're in two minds here. We can look at this as an A and a B and a C down to this point, but if this becomes the resistance here, then we'll need to be on the short side. So it looks like it wants to come lower at this point. So we'll need to start counting this down here as such. So this would be 1, 2, 3, 4, 5. It's probably 3 inside. I'll have to check that anyway. But what we should do is just start on this one here. So, well, we probably won't need that. We'll look at this here. There'll be another rally coming in off this. There'll be a bounce off this 2-2 here. So I'll just put that there and look at that 50-60%. So we can expect a bounce, but then further down at that point. So down for the bounce, and it may not even go that high as well. These old highs here, or even the 2s here as well. But really, we just want that first low below the level, and then we can look at it in that manner. Okay, so for the NASDAQ, the 38.2% retracement level is closer to the 1400. Will we move all that way down there? I don't know. We just need to track the individual waves. We've got the first move here is in 3 waves. So we're looking at the correction in 3, and we could also possibly have 3 here. So the 3 here is the 3 waves here is really part of a flat correction, but it's in the combination of a double zigzag now. So let's just go to the 4-hour chart. So we'll have to look at it something of this nature. So so this is a double zigzag here. So it's basically, this is going up the wrong way. This is going to the bullish side, but an ABC for the W, and that's what we've got on the way down. And then we've got the 3 wave for the X wave here, and then an A and a B and a C for the wave Y here. So they're really part of the flat correction, but they're an extension so they're an extension of the flat correction within all of this. So so that's probably sort of where we are within all of this. This is just a little book, a little free ebook that I've been working on. Maybe I'll finish it over Christmas. I wanted to put some videos in here and also put the Trading Levels course in here as well, which I need to redo because the one on our website's old and pretty needs a lot of attention. So anyway, that's another box to be ticked later. So if that's the case, then we need to look at this in a couple of ways. We can count 5 waves down, 1, 2, 3, 4 here, and then down for 5. So we can have, there's 2 things that can occur here. We can have the B wave move and then down for the C wave here, or we can just have a bit of a rally and drop here. So we'll just need to be a little bit mindful of this. So just on the hourly chart here. This is where we've had it counted yesterday as the A wave, the B wave, and the C wave down. So that's still okay. We could probably still do that in a way, but the point being here is that we've got wave 1 here and 2 here and 3 here and 4 here. So this wave 4 here that we looked at yesterday may need to go over here, and looking at this here, it's a little bit dodgy, but 1, 2, 3, 4, 5 here. So looking for a rally. Now, just got to be a little bit careful about this. Well, I guess the safe way about all of this is that if we see a rally coming off the low here, which we should do with the S&P as well, is then you will have that low here to short. Now, the question is will it come back just into this space and move down? I mean, basically, do I need to look at this as wave B over here and wave A over here? That's what I'm kind of thinking of. And that would just give us a rally here and then drop down in 5 waves at that point, down a bit, down towards sort of like 14,300. So just to let you know, that low here, whenever it may come down a bit further, right? But whenever it comes in, then you'll need to use that low. That's so needs to stay there. That's all of. Yeah. So just wait for that low to come in, and once it comes in, put a line under it to short at that stage. That should be on 650. That's the lower end of group 2. So it's getting support in group 2, and it may go back and retest. So there's two things here, that it can either do something like this and then come down, or it can just come down. So that low here, that's the takeaway. Okay, that's the one that you need to short at some point. So you'll just need to adjust that. And then that way you'll capture whatever's coming down at that point. The S&P, we've also been looking at it as wave 3 with an A and a B and a C here for this, but we've only got 3 waves here, so it's likely that we'll have 3 over here as well. So once again, we can count 5 waves down here, so we could look for an A, B, C here and then down again at that point. So the takeaway here is that we're not finished wave 4. It could be a wave 4 of one smaller degree as well, but that doesn't really matter for the time being, because we know that it's a wave 4, and once it's finished, then it'll move up at this point. If it had 5 waves down, well, then it'll be easy to track. But when it gets into combinations, we can end up with a few situations. We could end up with the triple zigzag as well. This is the sort of thing that it can do. So we just need to we need to really just track the intraday and just keep working the way that we sort of have done, really. So once again, let's just go in here and have a look at this. So on the 4-hour chart, I've made some changes here. We can look at it in we need to look at it in a couple of different ways. So yeah, I'll have to go to the intraday for this. So basically, looking at it as 3 waves, so W and then an X, and then we can look at it as an A wave here and a B wave here and 5 waves down here. So that would put this length here, that would be in 5 waves, so that can pull back to the 50-60% mark, wherever that may be. But if that rallies, it should bounce off, because it's coming into group 1. We've got 4,000, we've got 1, 2, and 3, which is all group 1. So this is the top of group 1, the 300, wherever that may be. Yeah, so that should see a bounce off this level. Number 3 always gets a bounce, and it'll either come back to this leg here, it'll either come back to 50-60% of that and then move down, or it's going to bounce a little bit. It's going to bounce a little bit higher, and in that regard, we would be looking for, okay, well, let's just pop this here. We can look at all of those as 1, 2, 3, 4, 5 down to here, and then we can have a look at the B wave over here, pulling back up 50-60%. So they're the 2 options that I can see with this. Trying to keep it as simple as possible. And the other one in here, we'll work this on the intraday, of course, as well. We'll just get the shell of it sort of happening here. I will put it on that level there. and coming back to here. So that kind of takes, I mean, so there's two things that can happen in this manner. So it could have a little A wave, B wave, and C wave back to here, and then come down in 5 waves at that point. Or we're going to look at this as 1 and 2 and 3 and 4 and 5 coming down from that space. So there's two things that can occur here in this space. But once again, I think one of the takeaways is that in the first instance, once we get the bounce off the low here, we will have that low. Do you know what I mean? And that low can be, I know it's a little bit late, but it can be the trigger for the next leg down. But what we want to try to do is improve on that. So we need to understand this move and also this move here as well, which is going to be a little bit tricky. They'll both be in 3 waves. A little move up there should be in 3 waves. So if it moves to the 61.8% mark up here in 5 waves, then you'll know that we're going to have a correction, then another 5. If it moves from here to here to the 61.8% in 3 waves, then you can short the low of the B wave. So in both cases, we're going to have this here. That can take us up to that B wave. We can short it here, and that would probably be in 5 waves at that point, coming back up to that point. But if in this case here, coming back up to the smaller version, we get this up to the 61.8%, well then we can short under that leg there, which will be the B wave. You know, so it's kind of a little bit tricky, but I'm sure your mind can just sort of grab hold of that. It's easier said than done, of course, as well, but that's it all in a nutshell there. So another way to view it, I guess, is looking at the 4,300 as the retested resistance and shorting that with the classic trading levels pattern, and then looking down to the next level, which would be 4,200. So the market's coming down at the moment. It's going to bounce. We could short it under this B wave here, and then we could also, when it comes through here, it will come back and retest that as well. So we could short it here. We can short it here. If it goes back above the level, then you're going to have to get it over here, and you could also add to it over here. But adding to it over here, once it's traded above the level, you're better off using the closest, largest number that's over here, the whole number, and use it in that point. You may get lucky, and we could see something very simple like this. So the bounce, where we're just here now, so the bounce here, you can also draw a line through here, so to short it over here as well, or get it here. So basically getting a position above the level and below the level is really kind of what we're looking at in that space. Can we just go in any further with this? This is just another count where technically it could end right here, but I don't think it will do that on a double bottom, so to speak. So we should get the bounce there. We've got 5 waves in this little move down through here. We could also count this as 1 and 2 and 3 and 4 and 5 here, and that's why it also leaves us with the other opportunity of coming higher in this space, coming back up to these levels here. So that's kind of it, really. We just can move these away. So we've got 5 waves here, so that could also just be, I'll just borrow these here for a moment. That can be wave 1 here and 2 here, right? So that means that we come back with an A wave, a B wave, and a C wave to here, and then drop. And that's what I'm saying about shorting it under here for that. But that's giving us 3 waves to that point. If you see that we get 5 waves to that point, then we're going to get a correction and then move up at that point. So this will be an ABC back at that point. So you kind of got to recognize what you've got here. So you might need to go into a 2-minute chart, or if you're using TradingView into 30 seconds or something like that, and try to figure it out. Let's just move into the tick chart here for a moment. Okay, from the top here, we've just got 5 waves down to make wave A and B here, and then we've got another 5 down. So it's pretty clear that we got 3 waves in there. You could probably get 5 waves out of here, but you'd have to sort of use a little 1 and 2 in here, which makes it kind of, it loses the perspective and the right look and feel about it at that point. The B wave has come back up nice and high, so that's all good. The move down through here, this is where it can be counted differently. If I can just open this up without losing it all. We've counted down as 1 and 2 here, and then 5 waves down for 3. We can go an A and a B and a C for wave 4, and then down for wave 5 coming into this point here. So we could call that wave, technically we could call it wave 1, but because we're working in lots of 3s, we're probably better off having it in 5, so we can put that here for that and that there. Now, as I mentioned, we could also put this, copy this over here, put the A wave here and the B wave here for that. And then we could also call all of this down for wave 1 as well. So I'm just sort of going over what we just went over in a way, but just having a look at it in closer detail, so to speak. So we could look at this as one, well, I know we can count that as 5 waves. So we're going to get about, do we come back to the wave 4 here or thereabouts and go down again? And that's where we can like short it through here. We can also draw a line through here as well. That's always handy. If you trade above here, then this is 4,300, which is the top of minor group 1. It's also a minor level, and these are sub levels, so it's 10, 20 and 30. So if that 20 here, not sitting right on there, but that 20, if that, once the market trades above here, and then the 20, the number 2, becomes the retested resistance after it's traded above here, then it's going to be locked into that position. It's going to be pulled down to that 43 at that point, and then it will do its little wiggle and bounce and get under there, and then drop from there. So you can start building in on the resistance of that number 20 there, okay, of number 2, the pivot within group 1. So do we get 3 waves back to here and drop into a 3rd wave to the downside, or do we make more of a climb and have this as the A wave to here in 5 waves, the B wave and the C wave up here? That's the other, that's what we need to, that's what we need to figure out. And it's probably not wave 2 because we're working in lots of names, but in fact we'll just remove those for the time being. So that's really where we are in a way, you know. And also when you take things on the angle here as well, just to note that it's the same thing as well. When the market comes down here, it treats it the same as a level, so it'll bounce off it, come through, retest it, and then drop from there. Now I say this a lot, but normally you just get the 1, but quite often you'll get, depending on the count, you'll get a second retest. So just make sure where your stop is in all of this. Make sure you understand that it can have a second retest, and after a while what you'll start to refine things, you'll start to understand why that is within the count. But the point here is that we've got a line on an angle here, and the market's migrating from being support to resistance, and that's how it does it. It's the same, you know, just like that was support here, and it's come back and checked it here, do you know? So it's always checking, testing, you know. So once you get that, you kind of get your timing improved on that as well. So okay, well that's about the best I can do at this stage, guys. So just to recap a little bit, coming back into maybe the 4-hour chart here, there's a couple of things that we can take away from this. Is that we're in this wave 4, it could be 1 degree smaller. Okay, that's one thing. That doesn't really matter at the moment because we know that we're in some type of wave 4. We know that the whole move down is bullish corrective because we know that we're working in lots of wave 3. So no matter what happens, we know that it's a bullish correction. It's not the end of of the bullish trend. It's not the end of the world, all of those sorts of things. Now, how will the market come down? That I'm not sure about. As I just mentioned, we may have a move back to the 61.8% of that last leg here and drop, or we could move up higher here and drop. I'm not quite sure. We've got that Evergrande situation occurring. As I mentioned, the media have overhyped it to, obviously, for clickbait and all that sort of stuff. But in further investigation, you'll realise that the debt can be covered by the assets within the company. The debt itself is not as big as the 300 billion. It's around the 80 odd billion, and that's split up. I think 250 billion is from BlackRock and Vanguard and HSBC and UBS and all those sorts of people. So not a biggie. Balance sheets in other Western countries can handle that situation. So it's quite small compared to the money lost on Xi Jinping taking out the tech stocks and so on. So yeah, not a big deal, but there is a payment due on Monday. So if that's not met or can't be met, that could be a bit of a catalyst for a drop over the weekend. So yeah, that's it. So thanks for tuning in. Enjoy the weekend. Cheers.